Good morning, good morning, good morning, good morning, all my good people out there. How y'all feeling this morning? Welcome to Trade Genius Live. I am your host, Trend Genius. And yeah, man, Wednesday. Good morning. How y'all feeling? Taylor, good morning. Kick Rocks, good morning. Patricia, good morning. Alfie, thanks for popping in, brother. Good morning, good morning. Jay Royal, good morning, y'all. How y'all feeling this morning, man? How's everybody feeling? Wednesday, middle of the week. Antonio, what's up, my guy? Antonio, I just realized on your picture, is that you? I see a snowboarder. That you snowboard? Just noticed that right now. It's fire. Serena, good morning. Kika Bug, good morning. Good morning. How y'all feeling? Let me know how y'all feeling this morning. Y'all feeling ready? Not ready? You feeling rushed? You're feeling good? Okay. Antonio, that's what's up. Yeah, I'm a snowboarder as well, man. I haven't. Let me see. The last time I snowboard was 2023. Yeah, the end of 2023. Kind of like I was still in my job because I went with some of my coworkers. I was still working at that time. I was still working at Harbor Freight corporate office. Yeah, that's what's up. Can I change my screen name? And if so, how can it be done? You know what, Patricia? What you have to do is you have to let's see here. I believe the way that it works is you would have to set that up. What's up, Double M? Good morning. Good morning. Ready to make some money? Ready. I bel we're not in Zoom, but I know in Zoom you just got to sign in. Torre, yo, um, it's a good question. You can change it. You can change your screen name and you can change your avatar as well. I know it has to be done in YouTube. That's the only thing I can think. But yeah, I'm not quite. I don't really remember, honestly. I know you know what? I'm sure you have to go in, sign in, and probably set it up. You may have to set up a new one. I'm not sure, but just Google it. You'll get it. You'll just Google it. Twyla, what's up, Twyla? Good morning. Good morning. Good morning. I'm good, brother. Tori, I'm good. Thanks for asking. I'm good, man. Feeling good. It's been cold here. Yeah, man. It's been cold. Been cold, like crazy cold. And then today it's supposed to be like back up to 91 degrees. Southern California. Crazy. Um, all right, so Patricia said ready. Let's see here. What's up? Somebody else said, I gotta get that. Oh, Kika Bucks are ready to make some money. Absolutely. How the rest of y'all feeling, man? Let me know how y'all feeling. I genuinely like to know that. How y'all feeling? You know what I mean? Did you get enough rest? Are you know what I'm saying? Are you well rested? You know what I mean? Feeling a little anxious. Is it in my YouTube? I believe so. It has to be. Yeah, definitely in your YouTube for sure. Awesome. Let me know how y'all feeling. How y'all feeling? Y'all feeling good? Feeling rushed? Not ready? It was 15 yesterday, and today we're getting a flash freeze. Ooh, yeah, brother. That's some cold weather right there. That's serious. Ready, feeling great. That's what's up. That's what's up, Torre. Ooh, 15. Ooh, it's cold there, brother. That's cold. That's serious. I'm up. I'm good. Elevated veggies. J. Roy, what you say? You almost ready? That's what's up. I'm telling you, I feel like putting my hood on. I ain't gonna even lie, y'all. Like it's cold. Maybe I'll rock the stream like this. There we go. Maybe we'll do that. Ready for the day. That's what's up. That's what's up. Well, let's jump into news. We talked about this yesterday. We had a big news event today. Nice and toasty here in Florida. I bet it is. I bet it is. Being originally from New Orleans, I know about that Florida weather. We used to go down to Destin all the time. Destin, Panama City, all through there. Yeah, right in the panhandle. Degrees Celsius. Oh no, yeah. Absolutely. You're in Canada. It's still cold. Absolutely, double M. It's still cold, brother. That's what's up. But yeah. So let's jump into some news. We talked about this yesterday. This CPI event. It was lackluster. It wasn't what I thought it was going to be. I thought it was going to be much more. How would I say? I thought it was going to be much more like way more volume. You know what I'm saying? Like just way, just way more volume than what it was. But yeah, that's it. Now, this right here just popped up. It wasn't there yesterday. President Trump speaks, and I don't know why they make it orange folder. Well, they should make it orange folder because when he talks, the market be moving. So, but yeah, so that just popped in. I would say because I always look at it the night before. It wasn't there last night, so sometime between last night and this morning, probably when I was sleeping overnight, whatever, this popped in. That's at 1:25 p.m. Pacific time, so that'll be 4:25 p.m. Eastern time. So just y'all remember, just keep that in mind. Just keep that in mind. 4:25 p.m. Eastern. Let's see here. The market it's about 30 minutes before the market closes. So it kind of might be what happened the other day. If y'all remember, it was right at the end of, let me go to the 5-minute. It was right at the end of, I'm working on a new, I added a new, where we at? Oh, okay. I'm working on a new eval, adding the eval. So going back to what I was talking about with Trump speaking, if y'all remember on Monday, this right here, let me open it up a little bit. This was his speech right here. This was not his speech, but this was him speaking. We'll go back and check that out. You can see right here, this right here. It was 2:30 p.m. my time. So we'll correspond those candles. So no. Let me see. Hold on. Let me make sure this is correct. So it was 2:30 p.m. my time. So that means that was after market close. So maybe he started speaking sooner than that. I don't know, but I had assumed that this was him talking. So maybe not. It probably, you know what? He was talking in between. Actually, I take that back. He was talking in between the 1 hour close when New York session closes at 5 p.m. Eastern, 2 p.m. Pacific, and the market reopens at 3. So it was somewhere in between here. You know what? I saw this and I was like, oh yeah, Trump was speaking. This is kind of like what happens when he speaks. But this wasn't him, unless he was speaking early that I don't know about. But I don't think so. So how do you add it? Just add it right now. Just how do you add it? You can just go like this. Just go, click the little box, and then actually first go to the price point that you want. So you want to go to 24,697.25. And then 697.25. And if you can't get there, what you have to do is a little trick. You got to open this up. So open it up. And then if you notice, you'll be able to get to the price point a lot easier. Sometimes you have to open it up because it'll be skipping over the particular price point that you want. And just slide it up. There you are, 697.25. Click that. Click draw horizontal line. Boom. And then it'll draw the line on that. You see it says draw horizontal line at 24,697.25, right? Boom. And then when you draw it, then you get a chance to choose the color you want up here. And then if you want to put text, you can put the color you want text, and you go here to settings, and you can do all of that. So text, and then you can just type in the text that you want and it'll be there. You can also change the font size. You can also change like the line thickness here. Pretty cool. If you want dots, whatever, however you want it. Pretty cool. So yeah, that's how you get it on there. All right, so let's get on it. Let's see what's going on today, man. All right. You know what? I always do that when you could just go right click, reset chart, and it jumps right there. Boom. All right, let's go to this here. 1 minute. And where are we at? 626. I don't know. Excuse me, y'all, my bad. I don't know. So this is the news candle. CPI 530. I expected this candle to be much more crazier than it was. So I'm gonna show y'all a little something. So let me change this to, okay, so you see this, I'm on the 1 minute. You see this is 530. This is our news candle on MNQ on micros. So I'm gonna go to NQ. And look how it looks different. It's a little bit different, right? Still has a crazy wick, little small body. Let me go back again. Just look at that candle. Take a little mental snapshot. And look at this one. Look how much different it looks. It's extremely longer wick on the bottom on micros than it is on regular, on minis. Look at that. And that's one of the things that I always talk about. Cosda Gregory, Grand Rising, brother. Thanks for popping in. Yeah, absolutely, Serena. Should be red folder for him. I totally agree with you on that. So yeah, so I'm showing you guys this we have about 3 minutes to the market open. I'm just going to touch on this real quick. And then you guys can always go, like I always say, go fact check. So I always let everyone know, even though micro and Q are it's a smaller version of mini, there are still two different instruments. So always keep that in mind. They are not the same instrument. Just keep that in mind. And how you know is you can go compare candle high, open, low, close, open, high, low, close on a lot of different candles in NQ, and then go compare them in MNQ, and you'll see that they're different. So always remember that they're two different instruments. And even though that MNQ is a micro, it still moves a lot different than very, very similar, but not exactly the same. So it moves, I'm gonna say very, very different. It moves a little bit different than NQ does. But let's get to the charts. So one of the characteristics of NQ you'll notice is that whenever we have these huge news candles like this, NQ will always find its way to that high. Why? Can't tell you why. I can just tell you what I've seen over time. And that's just something that I've just noticed. It always sweeps that high or sweeps the low, one or the other, or sometimes both. Why? Like I said, I don't know, but it does it. Market open in 1 minute. Market open in 1 minute. Let's see here. So my big brother, chop. Let me see something. So today, my bias for the day is, I don't know, man. It's kind of rangy, a little rangy today. Let's see here. So market opened here last night. This is Australia. And then at 5 p.m. my time, Asia hit and went bullish. And then 9 o'clock is when London comes in. And then we had another change. And during London, it just pretty much went super bearish. Kind of took a little pullback right here, went back, and look at that. Market just open. Look at that. Market just open. Interesting. Interesting. We'll jump back to that. I'm just tripping off just how this market just opened. It's crazy. Like wild. I'm expecting price to actually come back and at least sweep this sell side liquidity. That's my bias. Um, so I'm not quite sure um, about buys today, but there's still a lot of buy side liquidity as well. We have, where are we at? We have all of this right here. This is London high right here, 9 o'clock. This will be London high. London high. This is Australia low. This is Asia low. And of course, this is London low as well because it's still within the London time frame. So price swept this news candle, and I'm expecting the price to be bearish before it goes back up bullish. As far as one of my daily strategies, I don't even think that's going to happen today. I don't see it today. Yeah, that was a crazy candle. And we talked about this yesterday. Remember how I was stating that what I've learned about NQ is that a day before major news, price is always choppy and rangy, right? So let's go to the daily. I want to show y'all something real crazy. When I was setting up my daily levels, I was like, what? Let me open this up. This is yesterday's daily candle right here. Look at this. Look at that body. What does that tell you? Price did nothing. It went nowhere. Literally, look at that. I mean, yeah, it did come all the way that wicked all the way down here, wicked all the way up there, but the open and close, look how close they are. They're only 4.5 points away, which is what? 18 ticks. Yeah, I mean, look at that. Like I said, price NQ always seems to range on days before major news. Now, that's not 100% of the time, but this is just one of the characteristics that I've noticed. And if you can go back on your daily chart and you just go to the Forex Factory, correspond the days with the candles, and just go look. That's how you find those kinds of things out. Like literally, that's how you find those kinds of things out. So, yeah, just something I just kind of just wanted to share with y'all because we talked about this yesterday, and this daily candle right here, it proves it. Right here, this daily candle. This was yesterday. Proves it. We had a rangy day. Look at that. But this body is just basically telling us that price just pretty much just ranged all day. It stood within a particular price point and it just stayed there all day. So, like I said, it wicked up really high and it wicked down very low, but because the body tells you that it was just a rangy day. Now, if you compare that to the day before, look at the body on Monday's candle. Look how huge that is. Let you know price was moving, right? It was a trending day. Pretty trending day on that day. Yesterday, not so much. I just want to just throw that out there. I always like to give little tidbits. So, you know what I'm saying? We get an idea, firm idea of what, you know, how this ticker moves and, you know, all those type things. But I really, truly believe price is going to come down, grab this buy side liquidity, this sell side liquidity, and then continue on up. I don't really see, well, one of my strategies, I don't really see that one. We possibly could get a strategy here. Let's see here, 15. We could possibly get a strategy on this little 15-minute strategy that I trade. That could possibly set up. But even with that, like I said, I'm still looking for price to come down, sweep this sell side liquidity, which is the London low, and start making its way back up. Because let's see here, this is the open. We're on a 15-minute candle, so of course going to be less candles. So the open is here at 3 p.m. So like as I stated, this is the Australia low, this big long line right here. And Asia low is, Asia low is right along in here. But if we drop down to the 5-minute, it'll be a little bit more clear, more visible. But yeah, for me, I don't really see too much for me today. Like I said, possibly this 15 little minute strategy that I trade. We'll see. We'll see. Let's see here, 28, 25, 25, 58, which would be here. There's a conflux strategy that that I also trade as well. That's from one of our other coaches, but I don't really see that today. Bro, sis, what's up? Hey, you came on yesterday right when I ended the chat. I saw you. I messaged back. I don't know if you saw it. Is black on your screen? Double M? I'm not sure I'm not sure what you're saying. Yeah, 1 point difference. 1 point different. Yes. Hey, Trending is first time live here, but watched all the previous streams already. Thanks for everything you do for this community. Quick newbie question. Oh, you're welcome, brother. Haha, I saw. Nice. Quick newbie question. I just registered a free TradingView account recently. My data is 10 minutes late there. I guess I need to upgrade for the live. Yes. The free account doesn't give you, well, let me say this. Any subscription that you get on TradingView, data does not come with it. So, what I would say is you can get the essential plan. The essential plan is the lowest tier that pretty much will work. But I would say compare the essential, because anything lower than essential is just not worth it. Compare the essential to all the other plans. I don't know how many there are in between, but I have the premium plan only because I didn't want to compromise. I didn't want to compromise any features. That's just me. But DC, thanks for stopping in. Thanks for stopping in. I appreciate y'all. Y'all haven't already, hit me some free likes and subscribe to the channel, man, so we can stay locked in. Absolutely. But yeah, going back to, I'm gonna say, I hope I'm saying this right, Badovin or Badovin. Compare the essential plan and the other. I think it's like maybe 1 or 2 plans between essential and premium. Just go and compare them. If you jump on TradingView, you can compare them, and they'll explain to you the features that each one of them has. But whichever one you decide to go with, yes, you'll definitely have to get the live data. Essential plan works fine for me. Yep. I don't use a lot of indicators though. That makes sense. Absolutely. Jason, absolutely. If you don't use a lot of indicators, then essential plan, like I said, the essential plan it'll work. But once again, that just depends on, you know what I'm saying? Like, what are you looking for in your features? But the essential plan would work. Outside of that, whatever plan you choose, that's a subscription. So when I say plan, that's a subscription. Excuse me. I would recommend going with the annual subscription, because you get a chance to save money there. Also, you just have to pay for the data. I think the data is like 12, 13 bucks a month, $9 a month, something like that. So, but yeah. Mr. Denny Jones. What's up, my brother? Thanks for popping in. Yeah, essential is really all you need. I rock with premium because I like to use the replay feature. And then like I like to, if you want to have a bunch of indicators or just do a bunch of different things, that's why I have it. My Tradeovate plan brought my TradingView to real time when I connected them. Exactly. Soak It Insider. That's because if you have Tradeovate, if you're going to use Tradeovate as your broker, and this goes to bottom into, if you're going to use Tradeovate as your broker, then I would say just get your subscription from TradingView, and then get your data, pay for your data on Tradeovate, and then you can link them. Very easy to do that. I would recommend that if you're going to use Tradeovate as your broker, because getting data from your broker is much better than getting data from, remember, TradingView is just a trading platform, right? What they just allow you to use, they just allow you to link your TradingView account to trade to like any broker that you have. Which is Tradeovate, Iron Beam. There's a ton of them down here. So let me just log out of this account so I can show you, because I definitely want to make sure that you see that. So if you hit trade, you'll see these are all the brokers. Well, not this is paper trading, but these are all the brokers that you can connect your TradingView to. All of these. So Tradeovate is pretty much one of the Tradeovate and InterTrader is pretty much the best two futures brokers that you could use. I use Tradeovate. I use Tradeovate just because probably 95% of the prop firms all use Tradeovate as their broker. So what that does for me is that allows me to use Tradeovate for all of my prop firm accounts. Well, for all of them except TEF, because TEF is set up a little bit different. But for all the rest of the prop firm accounts that I have, I'm able to select Tradeovate as my broker when I purchase those accounts, and then I can link them to TradingView. And as you can see, I'll show y'all. See all of these? All of these are my brokers, except this one is my live account. And there it is. So, and also what that does for me is that allows me to connect all of those to my trade copier. So I'm always looking for prop firms that have Tradeovate because it just works with what I have. So little pro tip. But let me see here. Trying to make money on silver. However, if you buy a prop firm account and link it to TradingView, then you do not have to pay for the data on TradingView, right? You have to pay for the data on Tradeovate. Now, if you buy a prop firm account, excuse me, let me double back. If you buy a prop firm account, you do not have to pay for any data at all, because just about every prop firm account that you purchase comes with data. That's part of getting it. So if you get a prop firm account, you don't need data at all. You just need a TradingView subscription. And then when you log into, like let's say you bought a prop firm account, you chose Tradeovate. When you purchase that prop firm account, you will have live free data from Tradeovate, and then you connect that prop firm account, you connect that Tradeovate account to TradingView, and then you're able to go in, like you just saw me, I went in Tradeovate on TradingView, logged in with your prop firm credentials, and then boom, and then you're in, and then you got data. So that is another way you can do it as well. That's only if you're on prop firms. If you're trading a live account, then you would need to purchase, because with a live account, you're going to have a broker, because you can't trade a live account with just TradingView, because there's no money there's no funds that you can add to TradingView. So you have to connect the broker to that. Now, if it's a live account, then I would recommend Tradeovate. You would have your funds deposited in Tradeovate. You would buy your data on Tradeovate, and then you would connect your Tradeovate to TradingView, and then that would allow you to trade your live account on TradingView. Yep, real easy, real simple. All right, so let me get back. Price move into a resistance zone. Okay, so you must trade at Tradegheenyuz. The data is also from TradingView or separate? I'm sure I looked at the question late, but I'm sure you got the answer for that. Can you go over the London breakout strategy if possible? I don't trade the London breakout strategy. Yeah, I don't trade that. I've heard of it. I don't know it. I don't trade the London breakout strategy. Actually, the only breakout strategies that I do trade is like a little consolidation, little breakout, but I do not trade the London breakout strategy. Let's see here. Where was that at yesterday? Was it yesterday? Little consolidation area. It was yesterday. Let me get there. It was here. So let's do this. Let's do this. And let me get to yesterday, which was right here. It was 6:30. Yep. This is it right here. So this is a little this is a little consolidation trade that you could have took. I talked about this yesterday. So usually like right before the open, let me get on the 1 minute so you can see it better. Just with the 1 minute, it's a lot of noise. Open this up for y'all. Where are we at? Wednesday. Now let's get over to Tuesday. And it was here. No, that's 5 p.m. Come back. Still got to go further. Where are we at? I think it was here. Where are we at? Tuesday, 12 p.m. Getting to 6:30, y'all. Yesterday. It was, that's why, if you notice, that's why I always use, I think it was here. Yeah. It was right here. Yep. All right. So yesterday, let me give you a little example of this little breakout strategy that I trade. I missed it yesterday because I was talking. And so usually right before the market open, like you'll notice like right here, 6:24, it's like 6 minutes before market open, right? 6:24, 6:25, 6:26, 6:27, 6:28, 6:29. It's a little consolidation area right here. So what I'll do is, once again, the characteristics of NQ from me watching NQ for over 2 years is just something that I know that it does. Sometimes it'll happen on a 5 minute, sometimes it'll happen on a 1 minute. So what I usually do is when I rounds, like I said, between I say 6:20 and between like 6:21, 6:22 to like right before market open to like 6:20. Like I'm already looking for it, right? If I start seeing this, then I'm like, okay. So what I'll do is I'll take my little tool and I'll mark this out, right? Let me open this up for you so you can see it. I'll mark that out, right? Little consolidation area. Let me just get this really, really on point. All right. So, and what I'll do is, this is a little breakout strategy, little consolidation breakout strategy. And what I'll do is I will set my limit order right here. I'm just gonna put this fake line for right now. I'm just gonna change it to green. All right, I'll set my limit order like right above the box. I'll set my stop loss right below the box, and it's a very low risk trade. It looks big because I've expanded my screen, but it's a very low risk trade. And yesterday, our daily levels was like right up in here yesterday. So this would have been for me, this would have been a perfect breakout strategy because I target these pink levels and any blue levels. I just dropped some more content. I just dropped a new video yesterday. Go check it out. It's showing you how to find these levels. Pink levels are daily and blue levels are unmitigated. Let me see if I can find some unmitigated levels. There we go. You see a bunch of these blue lines. I show it all on my chart and show you how to find those. So yesterday we had a pink line right here, which is a daily level. I use those as targets. And when you watch the video, it explained everything that you need. So this is a little breakout strategy. So just kind of jumping on with you, DC, about, you asked me about London breakout. I said I really don't trade that. I've heard of it before, but I don't trade it. But this is a breakout strategy that I do trade. Right before the open, you just start paying attention, like right around 6:15, 6:20, start looking for little consolidation areas. You know what I mean? So overnight, it's 4 in the morning. This would be the London high. So for price to open bullish yesterday, kind of made sense. So like I said, I missed this trade, but this trade would have hit. And I would have set like I said, my daily level was somewhere in this area. Of course, it's changed now because if you watch the video, you'll understand why it's not there. And I would have targeted the daily level, which was here. It was one candle. Boom, done in literally a minute. Real quick trade. I call it a cheap trade because the risk is very low and the reward is very high. So even if it goes against you, I call it a cheap trade because the risk is very low, don't really cost too much. But if it hits, you're going to, you know what I'm saying? You're going to knock it out the park. So let's reset this chart. Let's get back to where we are. All right, so price. Let's see here. Let's correspond this previous swing high. This previous swing high right here. As you see, it almost swept London, because London high is here. Let me open this up. So London high is, let's see here, for me, 9 o'clock. So this is actually still part of Asia high right here. And then London high will come right in at 9. London starts right at 9 p.m. Pacific time. So actually this is Asia high and London high right below it. So price almost squinch this up so we can see. As you can see, price almost swept that, got pretty close. So that's why I told you I was looking for price to come down and then possibly continue on back up, because we have some liquidity here. And one thing you'll notice about NQ always loves to go take it's like what I've learned about NQ always loves to go take liquidity from the overnight session. Just about every day. Just about every day. You can go back on your charts and you can go check that. Go to the 5-minute, because it'll be easier, be less candles. Go to the 5-minute and you can check it. NQ loves to do that. So I honestly didn't think it would get this high. My bias was it was going to sweep this news candle, come down, take this sell side liquidity, and then continue on up. But yeah, but it went a little bit higher than that. Like I said, it almost swept London high there, Asia high there, meaning these candles here, that's Asia, London, kind of almost swept, got close. And now it's pulling back bearish, and we'll see. Let's see. Let me check my little 15-minute strategy here, see what's going on with that. Well, it did set up. Let's see here. 15, 30. Go to the 5-minute. 15. That's 30. 45. So we got it. All right. So, we definitely have a setup on the 15-minute time frame. Let's see here. I'm gonna go ahead and oh man, my one of my accounts is not connected. That's the other thing about trade copiers too. Sometimes your accounts won't connect, or not won't connect, they'll disconnect. All right, so let me check, y'all. Okay, I got it connected, and we're looking good there. So let's see here. I'm going to, I missed it. All right, so I'm in this 15-minute strategy. I'm gonna show y'all on my other screen. Let's see here, where we at? 15. Yep, it would be here. All right, cool. So let me show y'all. 15-minute. Let me just make sure everything is good. Yep, my new account. All right, cool. The limit order would be here on that. This is where your limit order would be set for this 15-minute strategy that I trade. I got it going on my other accounts. I don't trade that strategy on these accounts, but only because my other account sizes my other accounts are bigger, so I have a lot more drawdown. I don't really trade it on these particular accounts, but that would be the strategy. I'm in it on my bigger accounts, just because I just like to, like I said, I like to protect my capital. You know what I'm saying? Y'all heard me talk about that all the time. But yeah, that would be a strategy. I don't know what size account you have, but entry would be at the top of this candle. Stop loss would be here at the bottom of it. Here, entry here, stop loss here. If y'all want to take it, that's on y'all. Remember, any trade you take is definitely at your discretion. But that's what I'm doing on my other accounts. So we'll see. But yeah, let me get into here and see what y'all got for me in here. My bad, not gold, but MYM. Thanks everyone. Good morning. Wally B on board. Wally B, thanks for popping in. Starting to dump. What does that mean? Take liquidity. Take liquidity means, okay. So liquidity is what that means as far as take liquidity. All right, that stopped me out over there. A little, what we got? A little $250 loss. Not bad. It's all good. It is what it is. My account still lives to see another day. It happens. So going back to what you were talking about, we in drawdown, just waiting for entry. Let's see here. I'm jumping to your question. Let's see here. Yep. Yeah. So what does it mean take liquidity? So basically it's like taking liquidity is basically like, how would I say, let me give you, I want to give you like the true proper answer because I know what it means, but I want to give you like a detailed answer. So the high or the low of any previous session is where a lot of liquidity rests. And if you think about the word liquidity, right? Like just think of like liquidity, like what's the prefix of liquidity? Liquid, right? So we're talking about money. So taking the high and the low of like New York, like I said, New York always likes to take the high or the low of London session or Asia session, whichever one has the low, whichever one has the high. So basically when price takes liquidity, it's just going to that area where the high is. And when I say take it, it's not like it's taking anything, but it's just the term that we use, take liquidity. So if you noticed on the news candle, let me go back to that news candle. I think it's here. So taking liquidity basically is just it's not really profit, but it's actually like taking that taking that taking those like sweeping their high and sweeping their low. You know what I mean? That's pretty much what it's doing. So if you heard the word sweep, take liquidity, kind of like the same thing. 6 in one hand, half a dozen in the other. So it's just sweeping the high and sweeping the low, whichever one it does. NQ usually always does that every day. And if you go back and just like I said, just check your charts, you'll just go back, start back maybe like go down here and start back maybe like I don't know, go back like a year. Go back like a year and then just start combing through the charts and then you'll notice that that's what it does. But yeah, so it always will sweep the high and the low of the previous session. It's just something that NQ just does, but it's based on the characteristics. The term that I use is taking liquidity. So let me see here. Yeah, it reacted one of the resistance zones. 15-minute valid, waiting for pickup. Wait, 15-minute strategy are you talking about? Grand Rising, everyone. Okay, you guys on shorts. Taking liquidity is basically price sweeping people's stop losses and orders. There you go. Thanks, sis. Absolutely. Because up here, this would be a lot of stop losses up here because a lot of people went short, right? Because this is a high. So a lot of people went short. Down here on the, let's go, we'll use this one because this is, no, too far. Right here. Yep. So this is 330. This is Australia low. So on Australia low, there's here to be a lot of stop losses for buys, right? For this area, people taking buys. There'll be a lot of stop losses in this area. On the high, there'll be a lot of stop losses for sales. So basically, that's what it's doing is taking that liquidity. So what is it doing? It's going hit their stop losses either way, and that's liquidity. So think about it. If hit your stop loss, what does it do? You lost a trade, right? So to speak, right? You lost a trade. So that's the liquidity that it's taken. So there's money at those areas. Thank you, sis, for help for cleaning that up. Helping me clean that up. So yeah, so let me see here. What else? Okay, back to that price point area. Yeah, so I don't really see anything else as far as my strategies. Um, I went in on this 15-minute strategy, but it stopped us out right here. So now it's going up. Of course, that's what NQ does. It'll stop you out and possibly, well, I ain't gonna say it's what NQ does, but in trading, that tends to happen. You'll get stopped out and then price continue to go up. So basically, I was my limit order that was here. I was someone else's liquidity. Unfortunately, I was someone else's liquidity in this candle right here. Yep. So it hit my stop loss, took that liquidity, and now it's going up. And I'm assuming it's going to tap this daily level right here. Dang, I should have held my longs, but I didn't want to be greedy. Yeah. Yeah. Well, that's a good thing. That's a good thing, sis. Would you say you didn't want to be greedy? That's a good thing. That's a good thing. Definitely can't be being greedy. You took your base hit. You got your bread in your little small window. So there you go. That's good. Let's see here. What else? No, not on shorts, Jason. I'm not seeing shorts today. Got ×2 of my base hit, so I'm chilling. Yep. All right. So let's jump into question of the day. Question of the day today. It's pretty good one. I always like them to be, you know what I'm saying, pique some interest, get your mind going, get you thinking. So, is this a high probability trade or just a clean looking setup? Took the HSS and made the loss back. Nice. So is this a high probability trade or just a clean looking setup? That's the question for today. Let's talk about that. Is this a high probability setup or a clean looking trade? So let's talk about the difference. Let's talk about a clean looking setup, right? Clean candles don't equal confluence. Let's keep that in mind. Clean candles don't equal a confluence, meaning just because the candles look clean, that's not a confluence to use to say, oh, I'm going to get in this trade because the candles look clean. So, high probability trades always include what? They can include confluences, right? The different confluences that you may be using. It could be a liquidity sweep, like what we talked about. It could be the time of your session. It could be your indicators. You know what I'm saying? Depending on what indicators you use. It could be a squeeze, a breakout from a squeeze. That's a confluence. It can be hitting a reversal zone. That can be another confluence. It could be, turn my mic down just a little bit. It could be price being above or below the 50, the SMA or the EMA, VWAP. So it could be a lot of different things. Jump to the 5. So a high probability trade involves confluence. A clean looking setup is just candles. So we want our trades to be high probability, right? We want to make sure we have multiple confluences in our trade, at least 3. Some traders like 4, but I would say at least 3. 4 would be ideal. 4 would be perfect. 3 would be ideal. Look at it that way. So with that stated, we always want to make sure that we're looking for a high probability trade, not just a clean looking setup, because clean looking setups don't do anything for us. We want high probability trades. So now on a high probability trade, you got to ask yourself, on a high probability trade, would I take this trade 100 times? If it's high probability, I would say yes. You would definitely want to take it 100 times because it's high probability. Clean looking setups, just stay away from those. Setups clean, But then you want to start checking your confluences. Your confluences is what's going to make that clean setup. Well, let me say this. The confluences will upgrade a clean setup to a high probability trade. So you want to make sure you have all your confluences lined up before you take that trade because you want to be high probability. Remember that. It's very important. Clean looking setup is really just a clean looking setup. That's basically a setup with no confluences. A high probability trade is a setup with multiple confluences. That's why it's high probability. So with that said, I just noticed something. Let's see here. Yeah, I just noticed something. Let me do something here. I'm telling you, I promise I have a college, I promise I have a master's degree. I'm only saying that because when I had probability misspelled, I'm like, huh? I don't spell it like that. I promise I got a master's degree, y'all. But yeah, so you always want to go down your checklist to determine if the trade that you're going to take, that clean setup, is truly a high probability trade. Your checklist would be the confluences, and that would depend on your strategy. So I know there are people in here that trade a confluence. A confluence is basically, how would I say, like a confirmation. A confluence is a confirmation of that strategy. So Morbid Drifter, you trade the HSS, right? So with that said, there's some steps that have to happen in order for you to take it, right? Price has to reject off the I believe it's the 100 EMA. Don't quote me because I don't trade the strategy, but I believe it has to basically bounce off the 100 EMA, and then it has to be two large momentum candles in that direction, followed by a doji. 2 or 3 large momentum candles followed by a doji, and then I think you enter somewhere on the doji on the next following candle after that, if I'm not mistaken. I believe that's the way it works. So basically, your confluences are your confirmations. So if you don't have those confluences, then that's not a high probability trade, right? You got to have all their boxes checked. Thanks, Morbid. Was confused too. Yeah, so that's what confluences are. They're confirmations of the steps of that trade that you're taking. So just look at it that way. It's a trading term, confluence. Confluence just confirmation, right? So you want to have, I think in the HSS there is 1, 2, I think there's like 3 confluences that you need, or 3 confirmations that you need, 3 confluences that you need before you can take the trade. So if all of those confluences line up, then what? That's a high probability trade. If those confluences don't line up, then it's just what? A clean looking setup. So just keep that in mind. So remember, confluence or just a pretty candle? We want confluences. We don't want pretty candles. That is correct, Serena. Absolutely. I know in the HSS, that's pretty much one of the terms. Like I said, I don't trade it, but I know that is very true. Only buy above the EMA and VWAP and only sell below. That's actually a confluence right there. Confirmation, same thing. So let me see here. I'm gonna show y'all something because I do have that chart. I do have the HSS chart. Let me see here. It is right. I believe it's this one. Let me see. Yep, HSS. Yep, let's open it. So I have, as you see up here, I have multiple settings for multiple strategies that I trade. So I've demo traded the HSS, but I never went live. So let me see if I can find HSS strategy. I'm assuming this is it, right? This will be one right here, right? Y'all quote me if I'm wrong, because I know this is the 100. Let me make sure I got the proper. Yeah, the EMA. Yeah, it's the 100 exponential moving average. Yep. So I believe this would have been the setup right here. So you have your momentum candles and you want them to be, I remember him stating you want them to be flat bottom on top or bottom, depending on what direction you're going. And you got your doji, and I think you would enter the trade either here or here. I'm not sure, but to give you an example, like this EMA right here, that would be a confluence. In the HSS, this doji would be a confluence. So I don't know how many you need. Oh, these momentum candles will be a confluence. So absolutely. Yes. So just to kind of, go back for the explanation for the ones that were a little confused on that, those will be confluences. HSS meaning hybrid super scalping strategy for the ones that trade that. That's a Juvier strategy. You can go to his YouTube and check it out. If you're in a TEF Discord, Coach Euphoria trades that strategy. That is his strategy. That's what he eats off of every day. And I believe that's the only strategy that he trades. And he literally knows this strategy like the back of his hand. So I would say trades after double doji is risky and technically invalid. Would wait for a next setup. Got you. So I'm assuming this would be one right here. I'm assuming, because that actually looks like the trade there. Every momentum candles your doji, and I think you would enter here, and then you would just take a 1-to-1, and I think that hit 1-to-1. Yeah. So, but yeah, so like I said, it's up. I've demo traded it. I haven't live traded it, but yeah, you can save different strategies, because the thing about different strategies have what? They have different things going on, right? Different indicators, different candles. These are Heikinashi. All my strategies, I use regular candles. Y'all can see that. So, and you can even label it HSS. I put a flame, a little flame emoji there. You know what I mean? Because it's a fire scalping strategy. So, bam, I'm gonna go back to my chart, and this is pretty much my regular candles and my indicators and everything for what I trade. All right. Definitely would have hit. Yeah. If you took that HSS right there, that would have hit. Absolutely. Yeah, that lowest doji is the entry. Okay, gotcha. Took that one this morning. Gotcha. Okay. So let y'all know I don't trade it, but I paid attention. Like I said, I've demo traded a long time ago. I haven't been demo trading it like recently. So that's why I'm a little kind of cloudy on the rules. But when I thought about it, like I pretty much kind of remember. But yeah, so let's go back to that question of the day. So yeah, so let's always keep that in mind. Before you take a trade, make sure all your boxes are checked. Make sure all your confluences are there. That's why it's good to back test. That's why it's good to demo trade. And it's good to understand the strategy that you're trading, because you want to make sure understanding the strategy that you're taking is not just knowing where to place your entry, take profit, and your stop loss. It's also you also want to make sure that you are tapping into all the different confluences, right? For that particular strategy, because all strategies have different confluences. So make sure you check all your boxes, and make sure that clean looking setup is not just a clean looking setup. If you check all of your confluences and they all are there, like boom, I got this one, that is now a high probability trade. And you should be willing to take that trade 100 times, no matter what. Remember, if it's high probability, you take it. If it's a good trade with a decent win rate, 60% win rate, that means every 10 trades, you're going to be profitable on 6 from an average perspective, and you're going to be non-profitable on 4. If you're following all your rules, then you'll be compounding your profits, and that's how you win. So just want to touch on that. So remember, confluence, not just pretty candles. Just keep that in mind. So we always want to make sure when it comes to our trades that we take. So tip of the day today. Let's jump into that. Tip of the day today. Risk consistency matters more than win rate. I'm going to say it again. Risk consistency matters more than win rate. Let's talk about that. Because your consistency builds equity curves, right? Equity curve meaning your account's here and you want it to curve up. We don't want it to curve down, because curve down meaning what? You know what I mean? Our account is, our profits are steadily dropping. Our accounts are getting less, less liquid. So we want to have a nice consistent, we want a consistency builds. We want to have a nice equity curve. So GLK took, I'm gonna get to that. We'll get to that. I got you. Any tips for a beginner, like on what to trade and on what to avoid doing? There's a lot going on, but we'll get to that. We'll get to that. Let me run through this little, actually, like, tap in with this right here. This is definitely something good for what to avoid, and you know what I mean, what to not do. So let's talk about risk consistency. Our risk consistency matters more than our win rate. You may think that our win rate would be more important. No, the risk consistency is, because without risk consistency, our win rate plummets. So a high win rate with bad risk management over long term is going to fail. Think about what I said. A high win rate, but a bad risk management strategy over long term, it's going to fail, because your risk consistency is what keeps the win rate intact. Always remember that. The risk consistency is what keeps the win rate intact, meaning every time you take a trade, you want to make sure your risk is right around the same area, risk consistency. Period. If your risk is big, then you want to size down on your contracts. That's helping to keep your risk consistency intact. That's why I trade micros, to allow me to do that. If you're trading minis, it's hard to do that in minis, because, like I always state, trading anything more than one mini is it's too much. It's not good for your account. It's not healthy for your risk management. So I like to trade micros. People will say, well, micros is slow money. Yeah, but slow money is better than fast money. Think about it. If I take my time with slow money, that means I'm building up my account with consistency. I'm not gambling. And I'm using I'm keeping everything together. My risk management, I'm making sure that I'm not over leveraging. So you want to risk the same percentage every trade. That's what risk consistency is. So let's say in a trade that I go to take, the stop loss is like it's like $1,000 risk, right? So with that said, I'm not going to trade 5 micros. I'm going to trade 2 and bring that $1,000 risk down to probably about $400. And as long as I do that, I maintain risk consistency. For me, my risk consistency, I like to be around that $500 mark. That's good for me right there. That's perfect for me. 6, cool, but 500, 550 right in there, that for me, that's perfect. It's perfect for my accounts. My accounts can handle the blow. I live to trade another day. It ain't blowing my accounts. Even if I did re-enter, and y'all know I'm one and done, but there have been certain situations where I have re-entered. I think I don't know if it was this week or last week. I think it may have been Friday. Don't quote me, but I re-entered a trade, lost out on it. I think the loss was about $480. Re-entered, boom, it hit for like 7 something. So I made my losses back, and you know what I mean, made a little bit of profit. Now, if my risk at that time was $1,000 and I lost $1,000 on the first one, I'm gonna be very, very apprehensive about getting in that trade again. Why? Because if it goes against me, now I'm down 2 bands. That's not a good look for your accounts. That's not healthy. And that's not exercising good risk management, and that's truly over leveraging. Period. I'm gonna get to you, Double M. So with that said, I like to stay around that 500 mark. And with micros, you can manage that. I trade 5 micros initially. That's what I like to go into my trades. But like I said, if my stop loss is huge, I'm backing out of that. I'm gonna drop down to about 2 micros just to keep it safe. or maybe 3. Once you understand how to, once you understand how to, like how your ticks and all of that work, you'll be able to add this stuff up very quickly. Because 3 micros, that means $1.50 a tick, because 1 micro is 50 cents a tick, right? So if you can do the math in your head, you'll get good at it, because this is going to be repetitive. If you're a beginner right now, you might have to do the math like I used to. You'll get to the point to where you'll be able to do it in your head. You'll be like, okay, I know I'm 3 micros, it's 150 a tick. This has a 100 tick stop loss, right? So what's 100 times $1.50? You know the math on that. Real simple, right? Okay. So with that said, that might be manageable for you. If that's not manageable, then you drop down another contract, drop down to 2. That means now 2 micros, 50 cents each micro per tick, right? So that 2 micros, that's $1 a tick. So now that 100 tick risk now is only $100. You know what I'm saying? So that's how you can figure it out. I don't have a chart for it, GOK. It's just kind of something that I've after my 2 years of trading that I know. But I would say, just remember this: 1 micro contract is 50 cents. 1 mini contract is $5. Write that down, and then you can just start doing the math from there. Real easy. Also, too, what you could do, you can do this. I'll give you another way you can do it. So, I'm gonna log out of here. Oh, actually, I'm gonna stay in. So I'm gonna go trade, and boom. So you see up here, right? You see I have 5 micros. I'm on a micro chart, MNQ. Look down here. It gives you your tick value right here. That means each tick is $2.50, right? So let's do this. Let's change this to 4. Now look, my tick value is what? Now it's $2. Because remember I stated 1 micro contract is worth 50 cents. So we'll go to 1. And you see this tick value change to 0.5, which is 50 cents. So that's how you can gauge how much you're risking in that trade. Now, if we go to 1 mini, of course, that's going to change. So now you see 1 unit, which is one mini, is worth, the tick value of that is worth what? $5. Nah, let's not. We gon' respectfully, GLK. Like, MNQ is not 25 cents. I just don't. A lot of times, don't believe what you hear. Always go fact check and do your research. Seriously, always go fact check and do your research. So if I traded 2 minis, as you can see down here, now my tick value is $10. So that means in every point there's 4 ticks, right? 0.25, 0.50, 0.75, 1. So there's 4 ticks in every point. So that means if you're trading 2 minis, that means each point is $40. That's some pretty hefty moving. If you don't think it moves fast, go to your demo account and jump on there and trade it. And you'll see. You'll see, like, dang, this moves super fast with 2 minis. With 1 mini, it moves pretty quick. 2 minis is crazy. To me, you can't manage your risk like that. Now, if you're a professional trader and you're trading millions of dollars, of course, that's nothing. They're trading 10, 15, but none of us are professional traders. We're not there. So we'll go down to micros. And like I said, you can always know your tick value right here. It always gives that to you. And then you can do your math. That's how you do it. And then you can do it in your head, or you have a calculator right there. Just knock it out real quick. It's going to take some time to understand that when you're new, but you know what I'm saying? Like, at some point, you'll just start getting it down. You'll just start doing the math in your head. You'll be like, okay, my entry point is 25. Hypothetically speaking, my entry point is 25, 60. My stop loss is 25.20. That's 40 points. So in 40 points, we have 160 ticks, right? Because 4 times 40 is 160, because there's 4 ticks in each point. So that's 160 ticks, right? So if we have 2 micros, $1 times 160 is what? $160. Pretty low risk. And you can start adding, you can do the math, and that's how you can gauge your risk. That's how you can keep your risk consistent. Because a lot of times when you get in a trade or your strategy, whatever that is, like you're not going to know the risk right off. You're going to have to know where your entry is and know where your stop loss is going to be for you to be able to even calculate that. And then that's how you do it. It's real simple. This is the easiest way to do it. Just put in your contract there, look at what the tick value is, and then do the math. And just remember, there's 4 ticks in every point. That's what's up. Yeah, that's for the ones that would trade on Tradeovate. I only use Tradeovate as my broker. I do not trade on Tradeovate. So being that I use TradingView, and for those that use TradingView, you can just pretty much do it here. It's real easy to do the math. You got your calculator on your phone. You can put a calculator right here, and you can just do it real quick. $1 times this, 150 times that is real quick, real simple. And then you don't have to worry about even like going to find the chart. You can just do it instantly, because a lot of times you need to do it quickly because these trades, this price action is moving pretty fast. So you need to do it really, really quickly. If you're trading on Tradeovate, then I guess you can click through and jump on the chart. But if you're on TradingView, this would be the easiest way to figure out your tick value, and then just do the math. Just do the math. Real simple. So remember, 4 ticks in every point. So that's the way that you gauge it. Now, let me go back, and I need to answer some stuff here. So let's see here. Any tips for a beginner? GLK, are you in a TEF Discord? If you're in a TEF Discord, I would definitely go in there. Go to educational resources. If you're in the Inner Circle Discord, I will go to educational resources and definitely just start reading everything you can. If you go into my description, the first thing that you can do, because it sounds like you're very new, the first thing you can do, and I know my sis hates this book because she gonna tell me, I hate that book, bro. So in my description, not on my lives, for some reason, it's not on my lives, but if you go to one of my other my other videos, the other content that I have in my description, I have a free book. Just click the link and download it. It's a PDF. It's the Candlestick Bible. I would start there. That's where I started to learn candlesticks. So you just, to me, it's like the foundation, right? Because we're looking at candles, right? So you want to understand candles. You know what I mean? And I'm not saying that you're going to read that and it's going to tell you everything that you need, but what it'll do is it'll help you with reading the market. Now, there's still a whole bunch of other things that you need to learn outside of that, but the Candlestick Bible is a good place to start. That's where I started. I know my sis she hates that book. I know she hates it, but it's a good place to start. And let me keep going through. I struggled with taking trades above my budget at first because risk was too high. Got to know what your account can afford. Absolutely. That's another thing. You have to know what your account can handle. You have to know what your account can handle. It's very important to know that. These are all the little different things that you have to add into your trading game. I know it's a lot. It can be overwhelming. Don't let it overwhelm you. You will learn this over time. Because for me, it was a lot coming at me at first. I was like, dang, I got to know this. I got news. I got candlesticks. I have candlestick formations. I have all this stuff. But trust me, over time, you study, it will come. Is $150 good to start a live account? $150? Unfortunately, no. And I'm explaining to you why, Double M. Because to trade one, to trade one micro contract, that just one, you need at least $100 to $200 in your account. To trade one mini contract, you need at least $1,000 in your account to just trade one of those contracts. One mini, you need at least $1,000 in your account, your live account. And like I said, for trading one micro, you need at least 100. Of course, you can do it how you want to. The reason why I'm saying 150 is not enough because it doesn't give you enough room, right? I would say if you're going to trade micros, throw like $500 in there and just trade one micro. One or two. Don't go no more than that. Just trade one or two. Live account. Go slow. Think about it. One micro is 50 cents, bro. If you have $500 in your account, that's more than enough you need. You have enough drawdown. You have enough everything for whatever you're going to trade, and trade one micro. Yeah, it's only moving up 50 cents, or trade two micros. It's only moving up $1, but still, we're learning. We're trying to get this down. You'll get to the point to where you'll have more money than that in your account, and you'll be trading more contracts. We're not at that point yet. Let's start slow. Let's start slow. So I would recommend at least $500 if to trade micros, and I would only recommend micros. I wouldn't recommend putting enough money in there to trade minis, because to me that's account suicide if you're a beginner. The market will swallow your bread and won't even burp. Like, seriously. The market will swallow your bread and won't even burp. Like, it'll gobble up all that very, very quickly. So keep it easy. Go start slow. 500 is like ideal. You're trading 50 cents. 50 cents, one micro, or even if you're trading two micros, $1, $1. So if you had a risk, think about this. Now, you don't want a 100-tick risk, right? Because that's 20% of your account if it goes against you, right? That'll be $100 loss. That'll be 20% of your account if you have a $500 account. So that's why I say just trade one micro, manage the risk. You know what I mean? If it's a 100-point risk a 100-tick risk at one micro, it's $50. That's what? That's 10%. That's still a little bit too high. Still a little bit too high. You want to kind of keep that between 2 to 5%. You know what I'm saying? Like, you want to kind of keep it between there if you can. I mean, but that'll be very, very low. But at the end of the day, you're learning. You know what I mean? Remember, you're learning. So you're going to lose money before you make money in trading. That's why it's not advantageous to put a lot of money into an account and trade minis. You want to, 500 is modest, trade one micro and just work on that. All right, so let's go down. I like to set a long and short position, then a start stop order before placing. I drag my stop loss to make sure I can. There you go. That's another way you can do it too. You can drag your stop loss and it'll show you, depending on what platform you're trading on. Does that go for all markets? No, that only goes for the futures market. I'm not sure how it is in Forex trading. I've never traded Forex, and I know in Forex it's not ticks, it's pips. And it's a little bit different. So ticks and what I stated would be for the micros, minis, that would be for the futures market. I don't know what they do in the Forex market. But also, too, I do know that in Forex it's pips, not ticks. Yeah, M&Q is 50 cents. Got it. Tradegheenyuz website. Yep, you have a tab for that. We're broke. I recommend, if you're going to trade futures, GLK, I recommend Tradegheenyuz. The account is free. Account is free. You just got to fund it and pay for your data. If you're gonna trade live account, get your Tradegheenyuz account. Fund it with your funds. I mean, it's up to you. You can do whatever you want. It's not financial advice, but me personally, I would put $500 in there, and I would trade one micro, and keep it real simple. Some best advice I got early on was don't risk more than 5% of your total account per trade. Yep. Look at this. Hate it, bruh. I know she hates that book. My sis hates that book with a passion. She like, man, I can't stand the Candlestick Bible. But for a beginner trader, I definitely would say, even though my sis hates the book, she would agree that it's still a good book to give a beginner to, you know what I'm saying, to get an understanding of just candles. You're just there to get on. You're not going to learn strategy. It's just to understand candles, momentum candles, how they move when candles when they're flat on the bottom or flat on the top. Like, it's just good from a structural perspective of candles. That's all. That's really all it's for. And I believe that is a great book to start. So I know you need a big margin to trade overnight, but do commission and fees cost more too? No, I believe the fees and everything is the same. The best way to do that is, once again, just go into that trading menu, put your account size in there, and it'll tell you, because sometimes the margins do change. So just remember this. When the market is very volatile, brokers will increase the margins. So that one micro might not be 50 cents anymore. That one micro might be $1.50. So always check that. And the way you check that is the way I showed you. By going into that trade order menu, putting in your unit, contract, unit, same thing. And it'll tell you what the tick value is. And if it's long as it's 50 cents, you know it's at the normal margin. If it's anything more than 50 cents, it won't be anything lower. It'll stay at 50 cents. It won't go no lower than that, but it could go higher if the margins are increased because the market is volatile. I've seen that before. I've seen before where one mini contract was like, I remember it was like 125 or something like that, and it was like 450 one time. I think it was like a couple years ago when I first started trading, 2024. And I didn't even know what was going on. I was like, wait, why did that change? And then I had to hit up my mentor, and he told me, yo, margins change. The market's volatile. Oh, okay, I didn't know that. Bing, let me note that. So that can change. So it's always good to put that in. Now, also too, going back to your question that you asked, GLK, it's not the same for every instrument. Let me say that it's not the same for every instrument. Like silver is different, gold is different. Each instrument has their own tick value. So keep that in mind. The way you know that is just go to the instrument, real easy. Just go to the instrument and then you can check it. Like, okay, here, I'm gonna hit silver, right? Now, 1 unit of silver, look at the tick value. 25 bucks. 25 bucks. Yeah, that's super crazy. That means every point is $100. Yeah. So that's how you would know. So just go to the ticker that you want, go into your order menu, put however many units, contract, same thing, that you're interested in trading, and it'll give you your tick value here. And that's how you know. But yeah, each instrument is different. So just keep that in mind. Each instrument is different. All right. So let's I'm going to jump back to here, and then let me go back in here and let me see. NG is a good one for small accounts. You can make like $10 risk trades. Yeah, NG is a good one. And also at 500, you make $5. That's a good investment. Imagine you started a business with 500 and made $5 a day. You would be happy. That's very true. Good point. I didn't realize the margins changed. Good to know. Yes, they can change. And that's based upon market volatility. So keep that in mind. Tradegheenyuz told me my location ain't supported, probably because I live you live in the Caribbean. Yes, sir. Interactive brokers. I'm gonna show it to you. Interactive brokers. And it's on TradingView. I believe you can do interactive brokers. Let me get there. Let's see here. Trade. Right here. This one. Try interactive brokers. They're pretty decent. Iron Beam is decent too. But I believe interactive brokers, I believe you can rock with them. Just check them out. What you can do is you can try NinjaTrader. NinjaTrader and Tradegheenyuz either bought NinjaTrader or NinjaTrader bought Tradegheenyuz. One of the two. This would be my second recommendation after Tradegheenyuz. But you can try this because I know people that use this in other countries. So NinjaTrader might be a good one. If NinjaTrader's on the list, I would say NinjaTrader over because since you can't use Tradegheenyuz, I would go with NinjaTrader over everything else. And then if you can't use NinjaTrader, then try interactive brokers. But I believe NinjaTrader, you should be able to do it. And then you can link your TradingView charts to NinjaTrader. Because what you would do is you would come into TradingView, you would log into NinjaTrader with your credentials. That's what you would do. And then you log in, and then you'll be in your NinjaTrader account on TradingView. That's how you'll be able to trade your NinjaTrader broker on TradingView. Real simple. That's how you would do that. But yeah, try NinjaTrader first. If not, then go with interactive brokers. All right. So let's get back. Question of the day. Let's get some more talking points on that. So remember we talked about win rate, right? That 1 to 2 R&R. That's why risk consistency is so important, right? So if you, excuse me, if you are doing a 1 to 2 risk reward, that means, let's say you do 1 to 2 risk reward every trade. You are maintaining risk consistency. Because you're doing 1 to 2, meaning 1 risk to 2 reward, 1 to 2 R&R. R&R, the first R is risk, the second R is reward. And the numbers 1 to 2, 1 is risk, 2 is reward. So they kind of line up. So think R&R, 1, 2. 1 with the R is risk, 2 with the R is reward. So you always want your reward to be twice the amount of your risk. If you're risking $50, then what? Your 1 to 2 R&R would be what? Your reward would be what? $100. So that would be a way to also keep your risk consistency intact. So, and that's another reason why risk consistency matters more than your win rate. Because your win rate is only going to be as good as your risk. Remember that. It starts with your risk first. So, with that said, we talked about this. You can lose 50% of your trades if you maintain a 1 to 2 risk reward. You heard what I said? We talked about this a few days ago. Just for some of our new trade geniuses that jumped on that are here with us today. So you can lose 50% of your trades and you still will be profitable if you're using a 1 to 2 risk reward. So just always remember that. It's very, very important to know that and to always use that when you're trading. Think about it. You don't want to risk 20 points and you're only making 5 points, right? Or 15 points. That's not a good risk to reward, and that's not good risk consistency. That's going to kill your win rate. If you're risking 20 points, you want your reward to be at least 40 points. If you could do it by points, by ticks, however, you always want it to be double the amount. Your reward base is always going to be double than your risk. But also, too, you want to make sure you're keeping your risk very low. Very, very low. You don't want to be risking $1,000 and keep it around that. If you're trading 5 micros, you have if you're dealing with a prop firm, you have a 50K account, keep it around that 500 mark. And if the 5 micros put you over that $500 mark on your risk, then you drop down your micros, drop down to 3, drop down to 2. If you're trading a live account, same thing. You want to be on micros. If on that account, on that $500 account, you don't want to be risking a lot, right? You can't risk 500. That wouldn't make any sense. So that's why I say you want to trade smaller units, smaller contracts, period. So just keep that in mind. Your structure should always justify your target. Structure meaning your entry and your stop loss. That always justifies your target. Because if you entered here and your stop loss is where it is, where your risk is good, right? Then you already know what your target is going to be. Your target is going to be double the amount of your risk. So just remember that. Remember that. Remember that. So if you understand that and you understand the discipline in that, I want you to drop a 1 to 2 in the chat to let me know that you understood what I was saying. Just do a 1, 2. Put 1, 2. Let me know that it's a 1 to 2 risk reward. If you're disciplined, drop that in the chat for me. 1 to 2. 1, 2. Like I want to see it because I want to make sure that we are getting this in our psyche. So in the comments, drop 1 to 2 for me. If you understood what I was saying about our risk reward and risk consistency, just to let me know you got it. Because I want to make sure that y'all got it. That's what's up, Morbid Drifter. I appreciate that. I know you understand. Absolutely, DC. I appreciate that. Bodovan, I appreciate that. Soak It Insider, just want to say thank you for being willing to explain and re-explain all this stuff to us newbies. I envy your patience. Absolutely. Serena, I appreciate that. Antonio, I appreciate that. D Young, I appreciate that. You know what I'm saying? It's important. And putting it in the chat is what? Remember, we talked about this. It's not just for me. It's for you. It's so you know, because think about it. You're typing it 1 to 2. Your brain knows why you're typing it. 1 to 2 risk reward. We want to ingrain this stuff in our psyche. You know what I'm saying? We have to change our psychology when it comes to trading. So always remember that. And absolutely, Soak It Insider, you're welcome, man. I do not mind explaining and re-explaining because I do understand how this is. Bella, thank you. GLK, thank you. Soak It Insider, thank you. Raider 40, thank you. Karate 357, thank y'all. I appreciate y'all for engaging. Twyla, thank you. Benjamin, thank you. I appreciate y'all for engaging. Like, seriously, we have to make sure that we ingrain this stuff in our psyche. And the only way that we can do that is engaging and understanding, what that means and why we need to do that. So, yeah, I appreciate that because, like I said, in order for us, think about it, we're working together, right? I'm giving this information, but also too, I want to make sure that you understand. Like, if you don't understand, like, please always hit up in the chat. Like, could you explain that? Could you, I'm not quite getting it. And I know between me and the community, like me talking and the community commenting, like, we'll get it. You know what I mean? So that's the whole point of all of this. Wally B, thank you, buddy. 1 to 2, absolutely. Remember, 1 to 2 risk reward. You know what I'm saying? If you haven't liked me up, let me get some of them free likes. If you haven't subscribed to the channel, subscribe to the channel. I want you to be on this ride with us. I mean, it's your choice, but I would love you to be on this ride with us because at the end of the day, like, we're here to all become trade geniuses, right? That is the whole point of this channel. Trade Genius is the channel. Trade Genius is the host. Trade Genius is the island that we want to get to, right? We all want to be trade geniuses. That's the whole concept. I stated this for my viewers that have been here with me, my community that's been here before. They know about this. Some of you newbies, I'm just saying it for you guys. Like, that's the whole point of this. That's the whole concept. Trade genius. That's what we all are striving to be. Trade geniuses. And we're going to build on this foundation every day. Now, with that said, do y'all have anything for me? And just to kind of throw this out there, I got an appointment today, my 2-week post-op from surgery. So I'm going to go and, you know what I'm saying, get some x-rays today and see how everything's going. I'm assuming everything's going good. I feel good. My foot been waking up in the middle of the night a little angry. I wake up like what's going on? And like I told you, I don't take narcotics, so I just deal with the pain, pray on it, and then just kind of just let it go from there. But it's been subsiding. Like, I can say last night was the first night that I really didn't have really no pain wake me up in the middle of the night. Like, literally all the other nights prior to that, like, it was pretty intense. Like, I was waking up 2, 3 in the morning, like, you know what I mean? And then just try to lay back and go to, just not think about it and just go back to sleep on it. Thank you, Serena. I've traded and lost 1K, completely traded off emotion. Thank you, Serena. I appreciate that. It's live. I traded, lost 1K. Yeah. You lost 1K because you were trading on emotion. Respectfully, it's live. Respectfully. Remember, we're a community here. We're here to help everyone. No one is doing anything wrong. So if you state something, you know what I'm saying, we're here to help that be corrected. You know what I mean? Absolutely hard lesson. I've been there. It's live. Yeah, that's one thing we have to do. We have to turn off our emotions. I know that's tough. But you have to turn off your emotions in trading. And me and Morbid Drifter, we've been going round and round on that. we trying to get Morbid Drifter to that point as well. I want all y'all to get to that point. You remember, when we're trading, we want to be poker face. Just when you're trading, just always remember a poker table. Always think about a poker table. When you look at those professional poker players trade, how they looking? This look never changes. They can have a royal flush in their hand. They can know they about to scrape up all the winnings. Everybody went all in. They about to win it. They about to take the whole jackpot. They're still like this. No emotions. You don't know if they have a pair of twos or if they have a royal flush because they show no emotion. And I use that analogy because that's the way we need to be in trading. Like, stay stoic. Stoic meaning no emotion. Whether you have a profitable trade or non-profitable trade. Because if you, in your profitable trades, if you're like, yeah, and you get all super high on that, guess what's going to happen? That emotion is going to transcend into your non-profitable trades, because just as you get high on your profitable trades, you're going to get low on your non-profitable trades. So you want to stay in the mindset of, cool. You know, it's okay to be, I'm not saying don't say cool or have, you know, some type of something you say to yourself, but just remember, no emotions. You have a profitable trade, boom, great. Move on to the next day. You have a non-profitable trade, same thing. It ain't great, but it's like, okay, cool, no, whatever. I paid some bills today and I moved on. And for all of the newbies that are here today, because we got a few new ones today, trading is our business. Non-profitable trades are a business expense. Keep that in mind. Non-profitable trades are a business expense. Keep that in mind. Keep that in mind. Non-profitable trades are a business expense. It's not a loss. You didn't lose anything. That's the cost of doing business. We're not going to win every trade in trading. And I'm saying win-loss. Remember, that's just from an analogy perspective, but we're not going to have every trade is not going to be profitable. It just doesn't, that's just not how it works in trading. So just keep that in mind. All right, so bottom end, what we got? Risk reward versus win rate, 1-to-1 ratio, 50% win to break even. That's correct. 1-to-2 ratio, 30% win rate to break even. 1-to-3 ratio, 25% to break even. 1-to-4, 25 win, 20% break even. Good luck, hope you quick recovery. I think that short comparison might help people. Absolutely. That should be a tip of the day. What's that about? Emotions? Yeah, we'll get into emotions. Yeah, the emotion thing, I like to compound on those every day if we can, because it's just something that we're just going to deal with, man. It's just what it is. And I'm speaking from experience. So when I hear you guys talk about it, trust me, it's just taking me back to 2024. Telling you, there's times where I wanted to pick up my whole desk and just throw it outside. Serious. I didn't do it. Of course, I'm not going to tear nothing up. Now that doesn't make any sense. But at the end of the day, I felt like that. I'm going to be honest. I wanted to pick up my whole desk and everything on it, just throw it outside. Like, seriously, that's how I felt. Can't trade with emotions. Something I had to learn. You know what I mean? And when I start taking emotions out of it, know that losses are absolutely. They're a business expense. Absolutely, Morbid Drifter, that's what they are. They're just a business expense, nothing more. Because if trading is your business, we talked about this, right? Every business has bills. If you have a brick and mortar, you're paying rent, you got lights, you got to have somebody come clean your spot up, you got products that you, whatever it is that you're selling. She said tears from me. I threw my mouse, but that's it. That's funny. Hey, I've been there. Because think about it, like there's times where I had my mouse and I was like, man, and I had to realize, like, can't do that. Can't do that. Just can't do that. And I had to check myself. Like, yo, we can't do that. But you don't know these things when you're first trading. I literally cried after blowing an account. I didn't cry, but I was super duper hot. I was tight. I was so tight when I was blowing accounts my first year. And I just had to understand that, like, yo, you know what I'm saying? Like, bro, like, you know, there's times I had to tell myself, like, calm down. Seriously, being honest with y'all. I'm being completely transparent. I tell myself, calm down. I never broke anything because I just felt that's stupid, right? We pay good money for whatever we have. Don't break nothing. Because think about it, then you got to go buy it again. Then if you break it, then you can't trade, hopefully not your screen or your phone or your mouse. Like, don't break nothing. That's just, I understand it's frustrating. I know a guy that was in the community. He told me, like, he's like, man, I broke my closet door. He's like, I got up out my seat, turned around. He's like, that's the first thing I saw. And I grabbed it and I broke it. And I'm like, bro. And he was like, yeah, he's like, I did that because I didn't want to break any of my computer stuff. I'm like, okay, well, that was smart. But bro, like, calm down. You know what I mean? Like, we can't allow our emotions to take over. We just can't. So we just can't. Absolutely. I appreciate that advice. I learned if your strategy doesn't develop, don't chase the market. Also learn can't trade with the daily goal. Be grateful for what little you make. Absolutely, it's live. So I can just see the steam coming from your ear. Oh, what? Absolutely. Look, this Puerto Rican Cuban African American blood in me. Well, I got some fiery bloods, some fiery genetics running through me, boy. I can go there, but I've learned to, that's one thing that I can honestly say I love about trading. Trading has helped me understand myself. It's helped me like not just understand myself, but it has helped me like be better just with myself, right? Turn my mic down a little bit. It's getting a little high. It showed me how to do, be better. You know what I mean? And that's good because that's what trading will do, man. Trading's gonna whatever kind of emotion that you are, personality traits and all that, it's about to pull all that out of you. Trust me. And it can be scary because a lot of times it's scary knowing like, dang, I can be like that. Whoa. And you got to face that. You got to face that. Like, don't run from it. Embrace who you are. That's okay. No one's perfect. Nobody on this, no, there's not one perfect person on this planet, but you can make perfect decisions, right? And if not perfect, at least ideal. So that's what I try to work on. I'm not trying to be a perfect person. I'm just trying to be better today than I was yesterday. And if I keep compounding on that, at some point I will have developed what? All of us will have developed what? Some really good qualities, right? Personality traits, crush those idiosyncrasies that we have. We all have them. You know what I mean? And we'll just become better as people. So that's what trading does. Like, it's all good. It's nothing, how would I say, negative or bad, or it's all good, man. It's all a part of the journey. It's all a part of the process. When for some of our newbies, when you're 2 years into your career, you'll be looking back and you'll be stating the same things that I'm stating. Like, man, I remember I used to be hot. I used to be pissed. I used to be, angry. I used to be cussing, doing this, doing that. And then you'll get to a point to where all of that will just go away. And you'll realize, like, you know what? I don't trip anymore. It's cool. Like, it's no big deal. You know what I mean? And that's what's important. That's what's important. You know what I mean? So with that said, just always keep that in mind. Always keep that in mind. When you're working on your trading, you're also working on yourself. I can't stress that more. When you're working on trading, you're also working on yourself. You're also working on yourself. So don't be afraid to, check yourself. Don't be afraid to look in the mirror and say, man, I have this kind of personality trait, or I'm dealing with these kind of emotions and I need to correct that. Absolutely. Absolutely. Very, 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 very true. You need to correct that. So, you just got to just keep those things in mind. Just keep them in mind, because as long as you're working on those things, your trading, your personal self is going to just get better every day. And you're not going to do all of this stuff overnight. So don't even try. Like, don't even try. Do not try. Do not try to do all this stuff overnight. You know what I'm saying? Like, just work at it. Every day, you're working at it. Every day. Just work at it every day. Every day, work at it. Just work at it. That's all you can do, is just work at it. And that's what's important. Just work at it. And that will make you a better trader. Absolutely, man. Y'all have a great remainder of your day. Thanks for tapping in. I appreciate all y'all. If you made money today, close your charts, log out of your account. Don't close your charts. Keep your charts up so you can pay attention to them, understand characteristics of the ticker that you're trading. But at the same time, log out of your account, keep your chart up, and then just kind of rock like that. That's pretty much how you want to do it. So I appreciate y'all for tapping in once again. We're going to be back at it tomorrow. What'd you say, Mike? Self-control, no temper tantrum, just la la la. Damn. Well, trading wins. Absolutely. Absolutely. That's the concept. Absolutely, Mike. That's the concept. If you haven't liked me up, man, send me them free likes. If you haven't subscribed to the channel, subscribe. I got this alarm going off in my ear, 8 o'clock. So with that said, man, like once again, thank y'all for tapping in. Shout out to our co-founders at Juvier, at Scalp God. Love my brothers. Without them, we wouldn't be here. You know, hopefully y'all got some good value today. Let's compound on this knowledge. Let's compound on this education, and let's make sure that we are building every day. So I may not see you for a while, but I appreciate it. Absolutely, DC. If you can tap in anytime, it's cool. Remember, DC, we also have the we also have the recording. So if you can't tap in live, just go to the recordings. They're always up. And like I said, y'all, I dropped a new video on how to attain your unmitigated and daily levels. Go check that out. But thanks again, man. I appreciate y'all. You have a blessed day. I definitely see y'all tomorrow. Same time, same Trade Genius channel. Thank y'all. Love y'all.